Hello again. Let me share my screen and begin to produce. I'm still recording the video from the last that I just recorded. So I wanted to show this system because not everybody trades Forex. And understandably so, everybody has their thing that they like to trade. So I wanted to come over here and kind of mess around. So they have the Forex screener, but they also have um, a stock screener and a crypto screener. Okay. Now let's just look at Amazon real quick because I want to show you this piece of code and its effectiveness. I don't want that on there. Um, so this is a really piece of code. Okay, cool. So we're looking at, yeah, let's look at it. So we're looking at, this is 2020, right? Um, we can see July 20. All right, this is where the market was. Let's just see something here. Let's just say we're going to take this signal here and let's just see what happens. Well, 5% in 6 days, 15%, 168 days. That's kind of cool. Let's keep going because it's been on a big trend here. Okay, a big trend. And as you can see, we've got plenty of opportunities where we could enter this trend. All right, we do have some signals saying it's going down, but overall the market is going up. And this is kind of where I wanted to kind of hint to. Sometimes you have to make this small change here so you can see that the overall market is bullish. And if the overall market is bullish, guess what? We want to ignore these yellows and these reds because the overall market is bullish. Okay. And so this is another thing that I am against Vantage Point because they don't filter out the noise. You still get some whipsaw, so you can still make some human mistakes if you don't know this or if you don't drill back and look at the market. But when you're paying thousands of dollars for software, then that software better actually be AI and actually do these things for you. It's a little harder to code for PineScript. Maybe PineScript is not the right tool for the job. I think Python, maybe some R, is probably better tools. But PineScript is a very good alternative. You can do a lot so that we can get these arrows. So that's one less thing I have to do. So what you would do here is you would pretty much, and I'm going to show just how far the market's gone up. We can see this here. So what happened here is you have the market going up. Now something has changed here. So when you get this signal here, something has changed. Okay. This trend line has been broken. All right. So this kind of shows a potential that the market could come down some. Now it may come down and then it may go back up. So you would now have to measure how far you think it's going to go down, how far you think it's going to go up. It's going to go up just a little bit and then continue down. We don't know, but I can tell you this often means that something has changed. It meant that this yellow signal, I could have taken that yellow signal because something changed. But if we go here, and if you can go pretty back pretty far, but you can see here in the 19, before the coronavirus thing kicked off, uh, the market was at a stalemate. Okay, let's do this. Market was at a bit of a stalemate. So you have this here, and so the market is at a bit of a stalemate, okay? And then it begins to break out December. This is right when the coronavirus stuff really started to get big in December here. As you can see, it breaks the resistance and now it's going to the upside. It came down here. I don't know what happened during this area, but it came down here back into the box. And then you got another signal up, and that's when it start to do what it's doing. And let's see how far that went up. Let's say you take this signal, and as you can see, that's 97.55%. So that's pretty good. Pretty good return. And then that's what's 170 days. So that's like 6 months of time. Yeah, March to September, 6 months of time, 100%. That's awesome. You don't have to even trade any single thing else if you're getting that type of return. So that's kind of cool. But we don't need to know what's going on in the market with this system. And these are hourly charts, so that's why it's looking wonky like that. Let's, I don't want hourly charts. Yeah, that's all I want right here. You see here, as we're going up, you have some yellow signals. Now, if we drill in here, you can see that the market did go down for some of these. It did go down, but the best thing to do is to drill in the chart sometimes. And we don't care about the yellows and blacks when we're going up. If we were going down, we wouldn't care about the green and blues or the yellow and reds when it's going up. Okay. And then you can see here, like this is even before the coronavirus stuff was kicking off. We could see the markets overall, Amazon has been going up for a while, since 2018. You could see it's been on the steady climb, like it's just been climbing, climbing, climbing. We could have got it back here, $419.87, and just like rode the gravy train. Because now it's like insane. Like if I move that over, it's like $3,000 a share. You know what I mean? So but whether or not to stay in, you're probably gonna have to start reading fundamentals and things like that. But I kind of just wanted to show like, hey, we don't need to know what's going on in March to see this signal and then say, hey, I'm gonna take it because overall Amazon has been on an uptrend for the last several years. So I'm gonna take it and I don't have to study the news. I don't have to know what's going on in the world. I just get that blue signal there. We set up an alert. You get alerts there, sent to your phone or whatever, and then like, bam. And then here we could have got out here. We could have got that red signal, and that red signal would have told me, okay, it's time to get out. Okay. Um, but sometimes it's not a good out. As you can see here, you could have got in here, and then that yellow signal, maybe that's not a great signal to get out on because you wouldn't have made money. And then sometimes these blue signals are great because they allow you to get in late. Like for example, you didn't have to catch it all the way back here. Like this is 2012. It's been going up for a long time, like so long. Like right there, it's like freaking $29. $29. Like that's like significant gains if you can catch it. So, but again, in order to have the mindset to stay in that long, then you probably would have to be looking at fundamentals and things like that. Um, but let me exit out of this. Exit. This is data camp. This is where I learned how to do a little data science stuff. Um, Microsoft. Does it work on Microsoft? Let's see. Take a look. Microsoft has been climbing steadily. As you can see there in March, something changed to where they're getting blue signals too. Microsoft, how much money would you made me? 45%, which, for most people, 45% in a year is pretty good. So usually people want to get like 15, 20%, stuff like that. I believe in this is a climb that you're doing where 15% may add up over time so that you can make bigger moves. Okay. For me, this is like $97 a share. So at $97 a share, depending on how much money you have, you might only be able to get 10 to 100 shares. So if you're not filthy rich, then you're not going to get a bunch of shares. But if it climbs up for you, like here, this is in January 2019, you could have been taking these signals or one of these signals or any of these signals here. I mean, overall, the market is going up. So again, we want to ignore these yellows and these reds because the market's going up. We're going to take a risk in the event that we take these yellows and reds on a market that's going up. But any one of these blues and greens, there's plenty of them, we can take, and we're taking less risk. And so that's really how you start to weed out and get better percentages, which is what I wanted to kind of show and teach a little bit. There is, oh, let's take a look at Facebook. Let's look at Facebook. Facebook again has been on the climb, and guess what? Around the same time, actually a little month later, Facebook price does something nice for us. So we're gonna take that up there. Ooh, 69%. Those are big moves, and that's what you're looking for. So the first thing you're looking for is you're looking for something that is on a huge climb like this. Then you're looking for that blue or that green signal. And that's really what's going to do. The blue signals are more powerful to me because they come earlier, but the green is for the more conservative person. Like you can see, sometimes the green is right next to the blue. Sometimes that's what happens. Bring that over there so we can take a look at it. And so now we can take a look at the price. This is April 22. And again, if you can look at it now, that red signal doesn't look so bad because, hey, that's a pretty good drop. You can see that's 29% drop in the market. Now, red signals can also play us a factor here. I may wait for this yellow or this red signal, and I want it to come down. And guess what that tells me? That tells me, okay, the Facebook is going on a sale. Like, you know, this is a discounted price. Because remember, the overall market has been trending bullishly for quite some time. So when we get these dips, these is just sell prices. Like I get the market on the sell. Like it went from $216, now it's worth $122. This is the sell price. We want to buy low, we want to sell high. So when we look at this, which there's opportunities to look at divergence here too, right? Let's see if we can find some divergence here right quick. Price is going down, market's going down, market's going up, up. No, I'm not seeing it. No. No. So I'm looking for divergence with my eyes here, and divergence with your eyes is pretty hard because you have to kind of look at if this is going down and this is going up, and then the opposite as well, because there's a such thing as bullish divergence. And so, boom, 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 boom. So I can't find it right there. So it's cool. But I just wanted to show like these methods. It really doesn't matter what pair you're using. You can pretty much do any one of these and they're gonna do their thing. Apple. It's another popular one. All right. Apple's been on the climb around the same thing. So this is fundamentally something happened in April or March, right? I don't know what happened. I don't really care what happened. All I care is, hey, did we get a blue signal? Is the price looking good? And then these blue signals here are really good because if we look at it, guess what? I'm gonna get this price here. I know at the very least price is probably gonna get back to this level. Okay, which it did, and then it gave me another signal and said, hey, it just broke that level and things still look good. So continue. Um, that's it's really good money. That's what you want to do. And let's see here. Apple is peaking at 109.31%. All right. And so that's the market game that we're playing, right? Here's the signal here. This is very recent here. Let's see what's that's going. These are recent signals. And we see SARS below above here, and we're saying, okay, probably gonna bet that the market could get back to here. It's probably what we're gonna bet. Because the overall market is pretty good, right? Like most of these blues and greens, like the price isn't going below those crosses, But we can see these yellows and these reds, price eventually goes above that yellows, going above here, going above here. Not that these are measuring tools, but we can see that that's happening. We don't see that happening too often on the blues. Now it does happen here. Okay, we got some blues. Price did go back down here. Boom, 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 boom. That's a pretty good drop. But again, this is market choice. To me, the best decision is to let this drop happen. Be aware that the drop happened, but we know that the overall market is bullish. So we're gonna wait for this one right here. And we're gonna get Apple at $39. And then maybe you have the guts and the glory to hold on to it until it's $137.90, which is like 300% or something like that. So but this is technical analysis, all I know is Apple is a very popular company. People like to buy their stuff, and if people like it, then maybe there's an opportunity to get in. Google. Let's take a look at Google. Like it works no matter the market. These methods are gonna work. Looks like something happened in April again for Google. And ironically, all of these are going up at the same time. So a fundamentalist would have probably had a reason for these behaviors. Now Google would have gave you 34%, which is cool. Again, that's a great year for some people. Great year. But yeah, you could do these for any of these, right? And then what I'm doing here, like we filter out, like this is what I'm gonna do. I'm gonna go filter out like certain things, and I'm gonna say technical. Now we can go fundamental, and we can say, oh, you gotta have a certain ratio, you gotta have a certain EBS, and all of this stuff. We can go fundamental if we want, but I stick to the technicals, and then I like to see like if this company is popular, if they are doing something that other people are going to be interested in, because you want something with herd power. A lot of people don't do thorough research into the fundamentals. You can probably make a lot of money because you can probably find that company that's selling right now for $1, and in 10 years they'll be worth $3,000. You can earn some earnings along the way, different things like that. But like for like to try to get like second income or some type of earnings today, you could just keep it simple, and it's just like I'm gonna try to go with things that people are interested in. Like people are interested in shoes, so I'm gonna invest in this company because they sell shoes and people like their shoes. And I know that people will invest in them because they're a popular company. So let me stop this for now, and then I'll go to another market on the next video there. But that is the stock market.